All right, now to our first conversation. The recent executive order on oil and gas revenue remittance is more than just a regulatory shift. It is also a fundamental restructuring of Nigeria's national wallet by mandating direct remittances and ending long-standing deductions like the 30% Frontier Exploration Fund and NNPCL management fees. The federal government is betting on a federation-first model. Let's look at what it looked like post-PIA versus the Executive Order 9. We see the NNPCL collected all revenue. That's acting as the middleman. That's 2021 to 2025. Management fee, 30% deduction. Frontier Fund, 30% deduction for exploration. Gas flare fines. Infrastructure Fund, that was 40% of oil. We also have 40% of all profits. Then after the executive order there, that changes most of that. Contractors pay government directly, 0% deduction. Then we also see 0% deduction for the Frontier Fund. So all of that money goes to FAC. And then we see paid to states and federal government up to 100% of oil profits. So these are big changes here. Joining me to unpack this, we have Honorable Akintunde Oyebode, is the chairman, Forum of State Commissioners of Finance of Nigeria. He joins me right here in the studio. It's great to have you, sir. Good morning.
Morning. Great to be here.
Yeah. So these are big numbers. You know, looking at what the NNPCL had to deduct before sending, funds to the government. So it's huge, and definitely with the data being shared, on most of these deductions, in practical terms, in your opinion, how much money are we talking about, annually?
I think before we even talk about how much it might annually bring to the Federation account, it's the principle, right, and the philosophy behind it that is very important. Certain sections of the PIA are in conflict with the Constitution of the Federal Republic of Nigeria. Right? The Constitution is superior. These assets in Section 44 belong to the Federation, right? Revenues that accrue to the Federation stand to the credit of the Federation account, Section 162. So I think the first thing is just stating the obvious that, look, these sections are in violation of the Constitution, and these are issues that, for example, from 2019, 2020, in fact, 2021, I'm sure of, the Nigerian Governors Forum had already gone to start challenging some of these provisions, right? That these are things that are in conflict with the Constitution. So I think first thing is that the President is saying the Constitution is superior to every other law, every other act of Parliament. That's one. In terms of what this brings to the Federation account, it's not like it changes the Federation account significantly, right? It does add, in my opinion, circa 1.5 trillion. If you do some high-level estimates per annum, right? That is not, it's not like there's this windfall coming in, right? Because if you think about Federation account that accrues revs of circa, you might say 30 to 36 trillion every year, right? 1.5 trillion is important, but it's not a game changer. But I think it's a game changer from the perspective of going into the future. Revenues that belong to the Federation should go to the Federation, right? And NNPCL as a private entity should then focus on its operations.
All right. So, definitely these are what the NNPCL had to deduct, before sending out funds. And I'm wondering, is there a risk that if they do not deduct these funds, they might not get what they need on time to do things like, exploration, management fees? So, what if the oil man can't get the oil because the monies are coming slowly?
So I think you need to separate these issues, right? So first, this EO9 speaks primarily to PSC, right? Not to the JVs, right? So in this instance, who brings the capital? It's the operator of the assets, right? Who deducts their costs and then shares profits with the Federation, right? So in the real sense, NNPC is acting as a concessionaire. Right? They are not the operator. They are not the ones providing the capital. Right? They're just sharing in the upside, managing the asset for the Federation. So I'm wondering what the relevance of that is today. Right? That's one. Two is that if you think about frontier exploration, my view is that you've got to optimize the use of capital, right? All the very successful, right, exploration work that has been done is done jointly with the private sector. So, in the real sense, these are anomalies that did not happen pre-PIA. Now, the PIA was meant to improve the visibility of revenues and improve the revenues that accrue to the federation account. That has not happened, right? Pre-PIA, we're at circa $12 billion per annum. Post-PIA, well, we're basically scratching $2 billion per annum, right? We're losing almost 85% of the revs that should come to the federation, right? So we can have a long debate about what is the most efficient way to manage this. But you have to recognize NNPC has assets it operates. Maximize the revs from the assets you operate, right? That's why NEPL is there, right? Remember, there were things called government priority projects. The federation paid for those projects. Those monies were deducted from FAC on a monthly basis without visibility on what they were used for. Today, those assets sit with NNPCL. They don't even belong to the federation, who funded them as government priority projects, right? So you have to recognize that this is an anomaly, right? The country controls its oil corporation. The oil corporation doesn't control the country.
All right, so, for viewers that don't really understand how FAC, works, why does it matter whether the revenue is retained before remittance or, deducted, after sharing? Why does that really matter?
So first, there is a constitutional provision in section 162 that everything that stands to the credit of the federation must be paid into the federation account. The federation account then says, okay, these are all the things that we have to pay out. So things like cost of collection. You've expended some money to collect revenues for the federation. You get a cost of collection, right? You can then say, oh, well, there's, other charges, other costs that come out. You take those out first line. But everything else is then shared along in the prescribed manner as prescribed by RAMFAC, right? And as legislated by the National Assembly. Now, the impact of this is that when these revenues don't go to the federation accounts, right, it means there are fewer hospitals that are built. It means there are fewer schools that are built. It means that you have much less capital, right, to fix roads. It means that when you have ecological projects, when you have environmental challenges, the resources that should go there don't go there. Now, the question for me is, you can hold us to account as public servants. Absolutely, every day of the week. That is what we sign up to when we take the job. Now, if these revenues come to the federation, yes, it's the responsibility of Nigerians and the media to say, all tiers of government, come and explain what you've done, right? That's legitimate. But the revenues belong to 250 million Nigerians, right? And it should come into the federation account for that use. That's our arguments. Now, in terms of whether this, you said something about, how does this affect the revs of the company, etc. For example, on the JV assets, we switched collecting our revenues directly to a dividend payout system, right? Since March of 2024, we haven't received any dividends. All of 2025, we didn't receive any dividends, right? So again, you've got to ask yourself, how do we optimize revenues for 250 million Nigerians? I mean, you see on TV, Minister A comes and says, I only got X million. I only got 2% of my allocation. Well, guess what? These are revenues that federal government will receive when you take out the derivation component, 13% derivation. Federal government receives 52% of these revs.
Right. All right.
Those are revenues that go into critical areas of government.
So is this the silver bullet that solves most of the finance issues with the subnationals? I saw the data for last year showing that debt servicing for foreign loans, that has increased a lot. That's for the subnationals. So does this help reduce the debt burden, or is this just more money to service debt for the subnationals?
I think first, if you think about subnational debt, I don't know what numbers you're looking at. If you look at, and you can look at domestic and international, but on the domestic side, right, across all states, domestic borrowing has come down, right, significantly. In my state in Ekiti, domestic borrowing went down 30%, right? So these are DMO numbers that you can go review. On the
for foreign loans,
debt servicing,
foreign loans,
the impact of the exchange rate was the single biggest driver of the increase in debt service for foreign loans. Now, as the exchange rate has started to moderate, well, it's not like we're paying down more of those loans, but what was a problem 2 years ago is now a benefit to Subnational. So again, I expect that when you see the most recent DMO numbers on foreign loans, you see that those numbers have come down, right? Because debt service has come down because the exchange rate is moderating, right? So it's not there's no silver bullet solution to financing the public sector. But what we're saying is that what should come to the public sector, right, should come, right? So this will help. And I've given you the numbers, right? I mean, 1.5 trillion in what is a 30 trillion portfolio is circa 3%, right? So, I mean, 3% is not a silver bullet, right? But it's not just about aggregating more revenues. It's about the superiority of the Constitution of the Federal Republic of Nigeria.
Right, but still, this is more revenue.
Yes, it is.
For sharing between
Absolutely.
the federal government, states, and local government.
Absolutely.
More money. So can Nigerians expect more benefits? Can we expect that we'll get those roads, those inner roads that need to be fixed, new roads to help expand states?
Again, think about.
Can we expect more?
Absolutely, and you should as a Nigerian. Now, if I use my state as an example, the additional revenues we've received to date has led to new roads being built in a state like Ekiti, right? We've built a ring road in the state, a 17.85 kilometer road that connects our airports to the center of town. We've rehabilitated maybe 10 or 12 state roads in fact, when I say 10 or 12, that's in the last 12 months, right? We've fixed 9 general hospitals, right? And these things are happening across the country, right? And they complement, remember, the federal infrastructure stock that the federal government is enhancing. So when you go to fix Ibadan to Akure Road, right, that is a federal road that connects 4 states. What those 4 states are doing is they are also fixing their own state roads that come off that federal trunk, that feed off that federal trunk, and connect their own commercial centers. Now, that improves business activity, but it also improves your lives as individuals, as Nigerians, because then it's safer travel, there are fewer accidents, there's much less wear and tear to your vehicles, etc. So I think if you think about things like healthcare, right, where we're looking at where we're looking at our healthcare spend as a country, the federal government is clear about what its spend is, and the states are complementing that spend, working with the local governments to ensure that primary, secondary, and tertiary healthcare institutions are improved across the country. That is what revenues like this will help support.
All right.
And I think that's the crux of the conversation.
So what if there's a risk that NNPCL cannot carry out its activities the way it should, because of this?
What activities?
What next?
What activities?
Exploration, finding new.
But
new
NNPC doesn't do that. It's NUPRC who's even with the Frontier Exploration Fund.
No, if they don't get the funds, on time to make that happen.
And like I told you, NNPC has JV operations, right? This does not even talk about the JV
that's a
operations,
management fee.
right? Management fee on PSCs, right? Now, I'm telling you, and I say this very clearly, if taking the management fee on PSCs is what crumbles NNPC, then it means it's a badly run institution, right? That's what it means. Now, in case you are not aware, NLNG dividends, now NLNG is a different entity, right? NLNG dividends are paid to the Federation through NNPCL. NNPCL retains 20% of these dividends. What does it retain it for? They are not the ones shipping the liquefied natural gas. They're just acting as an agent of the Federation. And they get 20% of our NLNG dividends, right? So I think NNPCL is a well-funded institution, right, outside of this. Pre-PIA, when this happened, nobody complained. Nobody said NNPC was going down, right? And you need to be clear, right? Because I've seen certain comments in the press, right? First things first, let's establish some ground rules. Turkeys don't vote for Christmas, right? So when someone comes to say, oh, we might not be able to pay our salaries, we might not earn our salaries, etc., I'm like, no. This is the commonwealth of Nigerians, right? Nothing. So, look, if you tell me today that I'll fire you as Commissioner of Finance because there are 3 million people in Ekiti that we have to support, it's the price I have to pay, right? Because there's one person versus 3 million people, the odds are stacked against me. And that's how I think we must look at this thing, right? It is the commonwealth of Nigerians. Like I said to you, there were pre-PIA terms where the Federation got between 11 to 12 billion on an annual basis. Post PIA, with these controversial provisions, that shrunk to $2 billion. Now, the question I want to ask you is that in what society should that continue? I mean, you're a Nigerian, so, it's a simple question. This does not affect, and I'm telling you again, NNPC does not operate these assets. They don't finance the operations. They only share in the profits. And there's no change to the fiscal terms, right, to the operators. So there's no risk to the investors. And I'm sure that the implementation committee, when it finishes its work, any contractual agreements that NNPC had entered into, right, any settlements, etc., that is required, any collateralization, the implementation committee will ensure that nothing changes with the terms of those contracts. But it's important to state the philosophy is that if the asset is not yours going forward, you have no right to pledge it in commercial agreements.
So you see no risk at this point with this order?
I don't see the risk. I don't think it's responsible to cry wolf, right? I think that what the EO has done is it's been very thoughtful in saying, let's focus on the area where you do not provide capital, you don't operate, you only share in the profits.
All right, I guess that's a good place to anchor it, and definitely this is something we'll keep tracking, at this point to make sure, even though the fact disbursements keep growing, the Nigerians actually, get the very best.
And you have to understand one thing, like I think there's some fundamental things that you need to understand. First, if you think about the last 2 years, right, I think that the oil and gas industry has been one of the most impacted by the positive policies of the government, right? So if you think about the reform agenda of the president, right, there are oil and gas directives that have streamlined taxes, improved the fiscal terms, right, ease of contracting, etc. Those directives have now been codified in the Nigerian Tax Act, right? And we're seeing the investments, right? We're seeing $10 million of confirmed investments. We're seeing Bonga Southwest probably going to FID soon. So the industry is expanding, right? And this is all because the reform agenda is very clear. Now, for us, so NNPCL as a corporation actually benefits from a much improved reform agenda of the government, right? So the pie is getting much bigger. So I don't see any risk to the oil corporation or to future revenues for the federation.
We're still going to keep getting oil at this point. Honorable PoliticsToday Oyebode is the chairman, Forum of State Commissioners of Finance of Nigeria. We'll definitely keep, having this conversation, make sure we all get it right at this point. Thank you so much, Honorable.
Thank you very much.